Hey everybody, Joe Malone here, coming to you live on Dallas Trading Floor. Well, Drudge, Drudge today says it's the end of the Superbubble. Well, I tell you, if you were in Netflix stock, it certainly is. It dropped like a absolute stone. I have an iron condor on that, and it's all the way down. But fortunately, because it was a spread trade, there is some light at the end of the tunnel in that it's a limited risk trade. So I'm probably going to have to be doing some triage on that. But a lot of my other trades, my spread trades, seem to be doing good. So, what can you do in a market like this? What can you do? Can you go? What can you do? Well, let me show you this one on PayPal. By the way, if you're looking on TikTok, super easy to get on board. All you have to do is go to this address up here, and that'll give you the live feed from YouTube. It's bit.ly/DTF465, and that's the number of the show. So let's go right now. Pulled out of almost all my stocks. I got shut out of Tesla today. What can we do? Well, here's what I'm doing. I am doing spreads, but I'm doing bear spreads where the value of the trade goes up when the stock goes down. The trade I'm going to show you today is one I just entered on PayPal. Now, PayPal has been an absolutely terrific performer for the last year or so, but today it got removed from Investor Business Daily's long-term leader list, and I think it's going south, just like another stock that I did short called Viva Systems. So here's what I'm doing to profit from this downward trend. This is the weekly chart of PayPal. As you can see, since about September, it has been in this downward trend. So kind of what we're looking at here is we're looking at possibly thinking that this trend is going to move indeed a little bit lower. So what we're doing here is we are basically buying the upper puts and we're selling the lower puts for a March 18th expiration. This will increase in value. This value of the spread will increase in value if the stock continues on its downward trend. The out-of-cost expense for this one actually is 1/2 of this because I entered 2 contracts. So if you just want to go into this one, this will cost you a little bit less than $1,000 to enter this trade. Basically, what I did here was I bought the 18th March 165 put, and then I simultaneously sold the March 145 put. Now, normally I don't have a spread of this much. This is a 20%. This is a 20 spread, but I do believe because of the market conditions, this is justified. The maximum risk on this trade for the 2 contracts that I used here, you would divide this by 2 to get 1 contract, is 14.46, but the maximum return is a potential 25.54. There's about 176% potential gain on this, or about a little over 1,000% per annum if everything goes right. Now that means that the trade has to end up below 157.77 at the end of the trade. Here's where I enter the trade. As you can see, if the stock continues to go down, we will hopefully end up in this money zone here, potentially with a total profit of 24.54. If you like what you see, go to the address below and find out more about this trade. You'll get the slide deck, but you'll also be on the action trade alerts, which will alert you to other great trades in the near future. And of course, it's free. Well, that was my little trade, my little bear trade on PayPal. Now, as you've been watching me a little bit, you know that I'm almost totally in cash right now. But I'm doing some of these bear trades. Now, I do have a few exceptions. I did a bull trade on ExxonMobil. Probably not a great idea. But all in all, we're trying to get the best bang for our buck. So here's what we've got. Just wanted to show you the condition of the VIX. This is the kind of what they call the fear index. And with this one, we had a big pop in the fear. So are we at an inflection point? Who knows? But at least in terms of the VIX, it's going way up. We may get a pullback in the market. The market could come down 10, 20%. But you know what? One of the great things about a market coming down is that it sets it up for another round of buying. So just right now, the best thing to do is to get into cash as much as you can. If you're going to do any trades, try some of these bear spreads because they benefit from stocks going down. So right now, we've got a lot of fear in the market, obviously. As a matter of fact, that's what Drudge is saying. This is the high-low ratio. And boy, I tell you what, there's a lot of lows for the highs. Normally, a healthy market is going to have about a 2-to-1 of highs versus lows. Well, right now it's below 50%. So basically, for every low, there's 2 highs at least. As you can see, it's going down. So not necessarily a good time to be long stocks, but you can be short stocks. Now, you got to be careful when you short, because what happens when they have these drawdowns is that some of the biggest rally days comes in a market that is falling. So that's the reason why I recommend these spread trades, these bear trades, because they have a limited risk, and that's a very good thing. The stock of the day today, of course, is Netflix, and it just fell out of the sky, down 110 points. Ouch. And I was in a spread on this one, so I'm going to have to adjust the spread. And if you stay tuned to the show, I'm going to have something probably for Monday. I'm probably going to be adjusting this one down and out. We'll see what we can do to limit it, but that's probably what I'm going to be doing. But right now, Netflix just fell out of the sky, and we're seeing weakness in Amazon. We're seeing weakness in Microsoft. Apple's holding in there, but many of the big tech stocks are going down. I only have one stock right now, if you can believe it, and that is Rio Tinto, and that is a mining stock. Can you believe it? That's the only stock that I currently that I'm currently in at all. And so I'll just kind of give you a clue there. This is where I entered it. At right here, as it was coming above that 200-day line, and it's kind of been choppy. I mean, it's definitely kind of been choppy there. It's down a little bit, $1.80, but this is one of the ones that I think is potentially, if you got to be in a stock, this one is looking fairly good in terms in terms of that. So basically, here's the long and the short of it. Here's the stock market today. Boy, I tell you, we've gotten whacked again. The Dow was down 0.83. The S&P 500, it's down, but the biggest loser of the day is the Nasdaq, and of course that's what's represented by the QQQs. That's where a lot of my stocks live. Those are the tech stocks. So I got to kind of rejigger things. Fortunately, I was mostly out. If you were on the action trade alerts, we did put out an alert that we were going into, we were going into a pullback on the market. We did send that out basically on Tuesday. If you want to get on the action trade alert, it's super easy to do. This is free. Anytime there's a big market change, I typically will throw out something there. And we did definitely on Tuesday. That's when I started really piling out of the market. But you can get on the free alerts here. It's super easy. Just go to www.dallastradingfloor.com, and that'll get you on the list for the action trade alerts, where we show the condition of the market if it's moving into a downtrend. We're currently in a market in correction right now. So, I mean, it could go a lot lower, but there's ways to make money in a market such as this. I basically only have 2 stocks right now. I have positions in Tesla, and I have positions in Rio Tinto. Now, with Tesla, I was stopped out of my first position at 980. That's where I had my stop loss. I have stop losses on all the other ones at 900. So, if Tesla moves below and moves down to 900, I will be out. So let's take a look at the Tesla chart, just to take a look to kind of see what the situation is with Tesla. TSLA, of course, is the symbol for Tesla. So let's take a look at it. Basically, we are down huge, and we're down after hours 3%. We were down a whopping This day has been bad for Tesla. I do have a stop at 900. That's where I'm putting my flag in there. As you can see, my first stop here, that got annihilated at 980. That's where I started selling. Unfortunately, I don't really want to sell this because I do think it's going to turn around. But, you got to follow the rules. And the rules are, if you're down more than 7%, you should always consider selling. And I know it's sometimes painful. I sometimes break this rule myself. I try not to. I try not to. But if you're down more than 7%, always consider selling, because you can always buy back later on, and that can be a very good thing. So if you're down more than 7% on any of your positions, consider selling now, putting it in cash and waiting for it to come back. Because I do think that we are going to pull down maybe 20%. And then when that happens, of course, there's going to be a lot of opportunities to come back into the market. So I am not as bearish as everybody else is. If one of the things that is a good idea to do in situations like this is to build your watch list. And matter of fact, I've built a watch list that I think is pretty darn good. This is very high relative strength stocks. So when the market corrects, and we will get a signal, and of course, if you're on the action trade alerts, you'll see that signal. And if you go to this address, https:// it's actually bit.ly, it's actually www.bit.ly.com. This is wrong here. I have to read it, but bit.ly.com, www.bit.ly.com, DTF0063. You'll be able to get that list on the download. So that's a good thing too. And I'll be putting that out there probably for everybody else as well. So, without further ado, let's get into some of the questions that everyone might have. And so there we go. Let's see. Make sure I'm there. Okay, great. So so basically that's the long and the short of it. Let's take some questions here. We got a bunch of people that are already in the chat room. Very good. Kira, thank you very much. How far can we go down? It's a good question. It's a very good question. We could probably go down to at least 20%. So let's take a look at some of the indexes, and that's going to give us an idea. I first want to look at the Nasdaq, and I want to look at the Nasdaq, and that's kind of want to look at the composite here for the whole thing. So let's take a look at the Nasdaq. This is the real violation. This is what they call a vertical violation here, and what happened is it moved below that 200-day line. If you've been watching me any amount of time, you know that I'm very big when there's a vertical violation on an index, especially if it's below the 200-day line. That can mean a real change in character. So that's the thing. 1, 2, 3 days typically, and then on the fourth day, if it goes down like that, it probably signals a trend lower. Now, I have an expectation that we're going to see a dead cat bounce or a movement upwards on Monday, because nothing falls directly, and typically what will happen is it'll fall and then it will bounce up and then it will come back down. So I think we could easily move down 20% before we correct. And so basically I want to kind of show you, this is the long-term monthly chart for the Nasdaq. We could easily fall down. This was the downtrend. This is about 20% here, from here to here, and this was the original coronavirus drawdown. I think we could definitely see that, and if we did, that would be about to the 1200 level. That's going to be about at the 1200 level is where we maybe could see that. So I do think we could possibly come down to about that 1200 level. The thing is, what's that going to look like on a weekly chart? Well, if we were looking at a weekly chart, I think we could easily come down to here, because you see this was the top here. So we could easily come down to this $1,200 level. What does that mean? Well, what that means is many of the stocks that hold up to NASDAQ, these are the big tech stocks like Amazon, Microsoft, something like that. Look for a sell-off there. There's going to be some good shorting opportunities, opportunities possibly to ride some of these stocks down. And of course, I'll be trying to put out as much as I can on this because I think it's such an interesting topic. Okay. Jay has a question. Jim, any hope for the dead cat bounce on good old Docusign? Take a look for Jay. All right. DOCU, of course. This was an absolute stellar performer, but it's had some issues, and that's definitely definitely kind of where it's at right now. So basically, this is the DocuSign chart. I'm looking at the weekly chart here. When you're looking kind of see how far things are going to fall, this is the one you want to look at. Boy, I tell you, how the mighty have fallen. This has a relative strength of 7. Boy, this just is not looking good. How far do you think it could fall? Let's go to the monthly chart, kind of get that big view. I think it could easily come down. Boy, and I don't like to say this. This sounds so negative, but it could come down. It could go below 80. Could be about 70. I think that that may be support for it based on this prior high here. Made the prior high. It went up, and then it's going to give back all of its gain, probably. I don't think they're going out of business anytime soon, but I do think they could give back a lot of gain. So potential on this DocuSign, basically, it could go down, I think, as low as 70. So it could possibly give up almost one half of its value. So the question is, what do we do? How do we take advantage of that? If you'll notice, there's a green line here. This is the 21-day exponential. And when a stock goes like this, and it just this was the big sell-off that it had. Remember that on basically right at the beginning of December, this had that swan dive, and then it came, and then it's rallied, and it's tried to rally to the 21-day line, hasn't made it, and it's sort of rallying to the 10-day line. Here's the thing: if we get a rally on this one, I do think we may have a rally. We may have a potential to short it, and using a bear call spread or a bear put spread. That's what I think is going to probably be the ideal thing here. But unfortunately, I see support on DocuSign, and if the market continues to be weak like this, potentially is down as low as 70. Now, below that, I don't think it's going to happen. It is a good company. It's a real company. It's not, it's not a fake company. They have real income. I mean, their numbers have been excellent. But this is why we can't always depend on, we can't always depend on we can't always depend on fundamental analysis, because remember, when you're buying a stock, you buy it on the technicals and the fundamentals. But when you sell it, you're selling on technicals. And right now, the technicals for DocuSign just look terrible. The fundamentals for the stock is very, very good. So over time, I think this is going to do well. If you notice, their sales are going up 50%, 40% each quarter. That's excellent. We're getting to a point where we're going to get earnings here on the 26th. So we're getting close. We're getting close to earnings. But this looks fundamentally, DocuSign looks very, very good. I mean, their profits have been up, but the market in general it's just been brutal, and we fell below that consolidation. So my guess on DocuSign, we could get some support, maybe as low, and maybe as low as 70 on this. So this might make a very good candidate to do a bear spread on, and I'll be looking at that one, of course, for that. So DOCU, I probably will put out a bear spread on that one. Just not looking awesome. Question on this: which stock is in a perfect buy point right now? Well, there's very few out there. There is one that I do kind of like, and I do own it. It's called Rio Tinto, and I'm going to show you that chart right in as we speak. This is the one I do kind of like. It's with a cut base. It's it's a base on base formation. It's starting to it's a counter-cyclical stock to the market. That's where I bought it, but it pulled above the 200-day line and then it pulled back. So I may have bought it too early. But anyways, basically what's happening is this was my buy right above the orange line there, which is the reversal line. It did move above the 200-day line. This is one I do like, but boy, I tell you, there's not a whole lot to like in this market right now. It's just right at the 10-day line, but it's above the 200, above the 50, above the 21. So Rio Tinto, this is one that I do like. It's got it's got a checklist of 89. The only thing is, of course, it's a little bit off of its high, but in the market that we're in, that is not necessarily a bad thing because almost nothing is you know is at its high. This is close to its high, but Rio Tinto, this is one I do like. But even if you do buy this one, be very careful. I wouldn't go in with both hands on this one. So diamond hands are dead right now. We want to get into cash and hopefully get some better opportunities. Let's take a look at some of the people from TikTok. Thank you so very much for getting. Overall market might be going into a bear market. Absolutely, we are right now technically in a market in a correction, and that means that we are going to probably move down. And typically these consolidations, they run down about 20%. So that may be something that we are in a bear market right now. I mean, it's just really starting, and it could go lower. Now, if we're going to short stocks, the best time is essentially very shortly. Next week is going to be a good time to get very bearish on the market. And of course, I will be talking about bear spreads all the time because I've got a bunch of them out there that kind of might work for everyone. So I want to just kind of go over some of the stocks that I do have bear trades on now to kind of give you an idea of where we might make some money in this market, because it's not all doom and gloom. It's not all doom and gloom for the markets when it moves like this, because there are opportunities. And the reason what I like to do are these bear trades, and they can be very good, especially in downward trending markets. The reason I like them, they make money as the stock goes down, but they also limit the risk. Now, let me show you one I did a few days ago on RentACenter. RentACenter was looking pretty weak, so what I did is I did a bear trade on it. And this was revised as of this morning. So let's take a look in on this one. It's RentACenter, and I did enter it basically the trade on the 14th. That's just a few days ago, because I've been in about a week. Here's how we did it. We bought the 18 February 45s. We sold the 18 February 40s, 3 contracts each, for a total of $945. This put $945 in my account, but of course I was doing this back here on the 14th. Now we kind of look at where we've gone. We started out here right at this line. As it's fallen, of course, it's become more valuable. Right now, if I were to close out the trade, the fair amount for to close it out would be for a profit of about $245 on this one. There's a number of other ones that I have out there that might work as well for you. But again, I'm going to be covering a lot of those on the Action Trade Alerts. And this is free, by the way. And by the way, if you're in our Discord room, that's a great way to go too, because I just go over live trades there and try to get live trades there. So if you want to get on our Action Trade Alert, super duper easy. Just go to www.Dallas Trading Floor. All right, let's take a look at some of the other questions from TikTok. Thank you very much. How long are you working on stock market? That's a strange way of saying it. I've been in the stock market about 25 years. I actually, my first real movement into the stock market was in the early 80s. God, I'm getting old. I'm getting so old. Was in the early 80s, and I actually was around for the big crash of 1987, which is probably before some people are born. It was a disaster. I wanted, I was going to go to Chicago and go to the option pits. After that happened, it was no moss, no way. I ended up having to become an accountant for a while. That's another story. I was there for the 2000 debacle. I was actually in Silicon Valley, and I saw it right up close and personal. I saw pets.com. I saw a lot of swan dives there. It was pretty amazing. And of course, I've seen some other drawdowns as well. But It's nothing to, the sun will shine tomorrow. As Annie says, the sun will shine tomorrow. So don't worry too much. Just protect your positions. If you're down more than 7% on any of the positions, you want to possibly do that. Okay, Tesla put some calls for the earnings. You know what? I would kind of take a go slow approach on Tesla. I did close yesterday. Boy, I tell you, my timing was good on that. I closed my iron condor on Tesla. I just said, hey, and it was right at expiry. It was, so I just closed my iron condor, and then, and I didn't re-enter it. I'm glad I did that. So I kind of lucked out on that, on that one. But right now, you just got to be super careful. I wouldn't be going long. I wouldn't enter any new positions right now on Tesla. Just not a good time to be in it. Okay, let's look at Microsoft and Tesla. This is a great question. So what I'm going to do here is I'm going to go back over to, let's see if I can make that happen. I'm getting better at this, but not perfect, I'm telling you. So let's first look at Microsoft. MSFT, of course, is the symbol for Microsoft. I'm going to look at the daily chart first. So with the daily chart, here's what we've got with the daily chart. The key on Microsoft is currently Microsoft has pulled below the consolidation, but it is still above that very key level, that 200-day moving average. So right now, if I had Microsoft, I wouldn't be a seller, but it is 4 days to earnings. So here's my advice: if you are holding Microsoft, consider selling it into the earnings, see what happens with the earnings, and then possibly buy it back. That's what caused the problem with Netflix. I broke my own rule, and that is, if I'm not up 10%, you need to sell if you're going into earnings. And that's what I didn't do with Tesla, with Netflix. I had an iron condor at Netflix. I was not up 10% on it. I should have closed it before earnings, and I didn't. So I broke my own rules. I would recommend, if you're in Microsoft, I would sell it going into earnings if you're not up at least 10%. Now, if you have 10% or more gain, I would hold it through earnings, but I would sell it if I wasn't up that much. So let's take a look at Apple to see kind of what the difference is. And these are the two strongest stocks that are in the NASDAQ. Apple has been having issues as well. I did have a bear spread on it. As you can see, entered a bear call spread, and I have been making money on that bear spread. So I've actually done, as this has fallen, as Apple has fallen, I have benefited somewhat on this call. As you can see, Apple isn't quite as damaged as Microsoft. It's a little bit further above that very critical 200-day line. So it's got a lot more room here. So it's essentially safer. This is really the ultimate safe haven. Matter of fact, if you're looking at safe haven stocks, Berkshire Hathaway, that's the Warren Buffett company, basically it's a railroad, a bunch of Apple stock, Dairy Queen, and a few of other stocks. I have a call that I'm going to have to probably, I'm probably going to turn that off just because, just because that's the way it works. Okay, so this is Apple here, and again, I think Apple, of the two, if you have Apple and Microsoft, I think you're safer right now with Apple just because it is performing better in the market. Also, another advantage, of course, with Apple is Microsoft is 4 days to earnings. Apple has already come through. It's a little bit further out. It's basically 8 days to earnings, but there's going to be earnings next week, so we got to be very reticent of that. We probably don't want to be holding into earnings if we don't have at least a 10% cushion. That's the key on that. So I would be a little bit careful on that and look for that 10% cushion. But Apple versus Microsoft, I have to say that Apple is doing better right now. How far will it go down? I can't tell, but basically I'm looking at possibly a 15% drawdown, 10% drawdown. We can take a look definitely at the indexes. I'm going to look at the S&P right now because that's a little bit broader index. than the NASDAQ is. So I'm going to look at the S&P 500. These are the 500 largest stocks, of course, and this is the S&P 500. And so what we're going to do here is going to look at the S&P and see kind of where the violations are. This is the weekly chart for that. We have come down and we've violated, this is why this 200-day line, I'm always talking about this 200-day line. That's why it's so critical. This is the 200-day line. You notice it hasn't violated that 200-day line since way back here in June of 2000. And we're up quite a bit from there. We're up from 3,000 almost to 4,400. We're at 4,397. So we're basically up quite a bit. We're up this much since the last drawdown. Okay. Now, drawdowns typically, this was the coronavirus drawdown, typically are approximately, let's take a look here. This was from about 22 to 33. This is about a third. So this was pretty much a 30% drawdown here. We potentially, if this rolls over, we could have a 20% drawdown. We're going to have a 30% drawdown, but on the S&P, it could draw down to right about this level, about the 3,500 level. That's kind of what I'm looking at. We may get it going all the way down to there. I don't think that's necessarily going to happen, but that's probably where the resistance is and the floor is 35.68 on the S&P 500. So there's a little bit of there's about, I would say, in this, between a 15% and a 20% overall drawdown. So that's kind of what we're possibly looking at here. We're going to probably give back a lot of gains, and then, when it all looks bleak and everybody is crying, that's when we take out our cash and we start buying. But right now we want to be in cash. So the most important thing right now, if you're not in the bear trades, is probably to be pretty much in cash. So what I would recommend, if you're down more than 7% on any of your positions, I would just consider selling it, putting it in cash, and waiting for a better opportunity, because that's really what trading in the stock market is all about. It's about being ready for the opportunities when they present themselves. And right now we're pulling back, so there are some opportunities for short positions, such as the bear trades, the bear put spreads, the bear call spreads. But other than that, we don't want to be short. We just kind of want to be out. We want to be in cash, and cash is a very good way to hedge the market. Believe it or not, it's a very good way to hedge the market. All right, look at Amazon, AMZN. Let's look at Amazon. And Amazon, let's pull up the weekly chart for Amazon. Let's take a look at it. And basically with Amazon, we have this violation, and it basically moved down. This is the consolidation range here. We are below that, so it looks like it is definitely going lower. Because it closed below this low here in this consolidation, it's very likely to go lower. Now, stocks don't move up straight up or straight down; they kind of stair step. But when they step up, they typically stay up. When they step down, they typically stay down. It looks like, unfortunately, Amazon has stepped down. Also, want to look at the fundamentals here just for fun. Typically, for a stock, we want to see growth of 20% or better. We've had slowing growth in terms of sales from Amazon. The market, because of the inflation, the overall economy is getting weaker right now, and so we're going to see some of the retailers, the big retailers, online retailers, not do as well. We also had this is 1, 2, 3, 4, 5 quarters. We had a loss, a profit decline in Amazon. This is the first time this quarter. Now, we are going to be on the 3rd, February 3rd, we are going to see earnings. So earnings are in 13 days, almost about 2 weeks. On Thursday, 2 weeks, we're going to see earnings on this. If you're in this stock and you are not up 10% by earnings, you should probably sell it, take your profits, and then just wait it out, see what the earnings is going to happen on earnings, and then, if it's right, go back in. But right now, stay out. Okay, question. Jim, what brokers do you use? Well, I use several brokers. Um, my main brokers are Charles Schwab and TD Ameritrade, but I also use Fidelity as well. And I'm going to be starting, hopefully, to use Interactive Brokers as well. They're all very, very good. I particularly like Thinkorswim, which is available exclusively from TD Ameritrade. If you're interested in, possibly signing up for TD Ameritrade, you could send me. I could probably send you a link or something like that. But it's easy to get. It's easy to get. It's easy to get signed up. I do like TD Ameritrade because of Thinkorswim. That's really one of my favorites. If you want to get on TD Ameritrade, just send me a little email at not www. Just send me at the Gmail account for Dallas Trading Floor if you want a link or something like that to to TD Ameritrade. They have very good. They're very competitive on everything. So just Dallas Trading Floor at gmail.com if you're interested in a broker that you like to use. I like TD Ameritrade. It's been probably one of the better ones for me. Tesla is going to continue to drop as much as the competition. It might. Tesla is one of the last of the Mohicans in terms of a stock that has not yet rolled over. That's been the main thing. Most all the other big stocks like Amazon, that's why Netflix, which is a FANG stock, was a big rollover, and that's significant. So Tesla is sort of the last of the Mohicans. It's way down there. It's at 937 in the after hours trading. I do think we're going to get a dead cat bounce, but you never know. I have my stop loss set right here at the pivot, which is right about 900. So that's sort of my line in the sand for Tesla. So if it comes down to there and it blows below that, I'm going to be out. So for this one, at least for now, at least for now. But I may be back in. But right now, I'm going to be. That's my stop loss on Tesla is right at 900. I did have some of my positions at stop loss out at 980, and they blew past those today, so I sold at 980. But I do have another set of stop losses because I have multiple positions in Tesla at 900. So I will take a little bit of a haircut if it does go down there. So, but that's the name of the game. Let's look at Costco, COST, and of course this is one of the last of the big retailers. It's also not looking too hot in terms of its chart. I wish this chart was looking better, but it's not. This one has fallen below. It's below it's still above the 200-day line, which is good. It has a very strong relative strength, but in this market, I think it's just a bad market for everything with the inflation. And I'm old enough to remember Jimmy Carter's inflation, and I remember how devastating that was. It just killed sales. And I suspect that there's going to be a call very, very soon for wage and price controls, which will just add fuel to the fire. It'll be terrible on that. So, but right now on the pattern rec, on Costco, we are basically 24% below the pivot, which was a cup with handle, which is a good breakout. We're below that 24%, so that's quite a bit. Their checklist on Costco was good. Really, it was really looking good up until about mid-December. Then it started to get a weak, and it's just gotten weaker. So you don't really want to be in this one right now. It's just one of those things. It still is above the 200-day line, about 6.74%, but it's below everything else. So I would not buy this one. I would avoid it right now. It's just not a good place to be, unfortunately. Great thing, Death Vice. You are absolutely right. I'm 75% in cash currently. When do you know when to get back in? Watch my channel. I will tell you, because what we look at, and we look at this all the time, is we look at the indexes. And when the indexes turn, that's when you start piling back in. It's good that you're 75% in cash. I'm probably even more in cash than you. I have one position right now in the small portfolio, and that is Rio Tinto. So I'm about 88% in cash. I don't necessarily recommend you're going that extreme, and then the rest of mine are pretty much bear trades. And I do have some positions in Tesla that for some stupid reason, I'm breaking my loss. I probably regret that, but anyways, I do have some suggestions there. Is the bear trend completed? Not by a long shot. I wish it were. I think we got about another 20% to go down. So I do appreciate the call, but bear trends don't happen in one day. They usually develop over a few months. Now, we did have an exception in the flash crash that we had in when the COVID thing happened. That was very, very quick. Now, if you were watching me back then, I don't think a lot of people were watching me back then because I would just have a lot of followers back then. But what I was doing during that period of time was I was shorting an ETF called the Spider and the Q, the QQQ. And we may get into a situation where that may be a good strategy, is to actually short the QQQ or the Spider. I think the QQQ is probably the one to short, and I'm going to be looking at that possibly as as something to do this next week, because I do think we're going to see some more weakness. All right, Jim, newbie for options. Great. I had a spread on bear put spread on Zim today. One of my option legs is getting assigned automatically. Interesting. Okay, well that is one. Well, the thing to do is to close out the trade, but you should have profit on that. That's a very good question there, because the options that we trade are what they call American style options. American style options allow assignment before the expiration date. So what I would do is I would just close out my other position. If you got assigned, you got assigned. I understand why they did it. You probably got the put assigned. One of your puts assigned. I would just immediately just close out your other leg there, and that's the way to go. But you probably made money on the trade. So my guess is you made money on the trade. Let's take a look at Zim. And I don't know where you entered, but let's look at Zim. It's been like everything else. It's sort of been in the downward trend. So hopefully you did okay there. That is one of that's one of the things about the options, is that you can get assigned one leg like that. But it's the downward trend, so I can see people probably panicked and they did that. So you're going to have to close out the other leg. But you should be okay. But the bear trades typically will work in a declining market like we're doing now. So that's kind of good. Okay, let's take. I think I kind of messed up the profits. I ended up closing the other leg with a small loss. That's kind of unusual that you're going to do that, but the fact that you actually did it, that's a great thing. And usually it's not. Usually you want to do it simultaneously. That's why I use a limit order. And I need to make some videos on this because it's kind of a mysterious topic. It's not really that hard a concept, but the thing about options, it's unlike when you're buying and selling stocks. You sometimes are going to do that at the market. Okay, when you're buying and selling, especially these spreads, you do them at a limit price. So you calculate the limit price that you're going to use. You then put that limit price in, and I can show you this with the option profits calculator, how to do that. And then once you do that, you put it in as a limit order, and then when it's as a limit order, then when it goes to that limit, then you'll get a fill. So the thing with these spreads are, you're not going to get an immediate fill. You're going to put it in with a limit order. It sometimes may be 2 or 3 hours before you get a fill because of the way because of the fluctuation in terms of these legs. But it does work, and I will try to get more information out there, because it's a very important topic, especially now that a lot of people are going to be trading options and not underlying stocks because of the market direction. I got to show how to enter and exit properly with some videos. So it's a very, very good question. And if you're in the action trade, I don't know if you're in the Discord room, but if you're in the Discord room, I'm going to basically probably try to do some sessions on this for everybody in there, so that they can kind of get up on the seat, and then probably do some videos as well. But I really appreciate that. What are my thoughts on AMD? Well, under normal circumstances, I think AMD is a stellar company. Okay, but the problem with the market is we may have seen at least a short-term market top, and if that case, even though it's the best, it is starting in possibly a downward descent. Will it go out of business? Absolutely not. It's one of the greatest companies out there, along with NVIDIA. There's some great semiconductor companies, but there's been a lot of anticipation. The market typically is a 6-month indicator, so basically it's going to price to where we think the market is, the overall economy is going to be in 6 months. So the stock market is a leading indicator, and looks like we're in for a little bit of heavy weather going into the summer. I think the summer is going to see a lot of inflation, and that's what the market is telling us. The stock market is topped, more than likely. I'm not totally sure, but I suspect it's topped, at least for now. We're probably going to see a drawdown of about 20% or so. I mean, it's always hard to tell. And then, of course, when everybody gets sick of it, when everybody is sold, and they say that, it's the end of the world, that's when we're going to come back in with our cash and we're going to buy. So these market drawdowns, everybody freaks out about them, but they are tremendous opportunities. They're tremendous opportunities. It's funny. You're going to see a lot of fright and scare, and people can run around with their heads cut off, and everybody's going to sell everything. And then, because we are going to be in cash, we're going to come in, and when the market bottoms, and it won't bottom for a while, but when it does, we'll be right back in. And that's when you really make the money. Anyways, let's look at PayPal. PayPal has been kind of moving down. This is why I showed at the opening of the show. This is why I ran the video on the spread trade that I had on PayPal. And of course, it's a bear trade. So let's kind of evaluate that. Right now, PayPal is in a downward trend, and it's below the 200-day. It's below everything. This was a long-term leader, and unfortunately today it got removed. The two stocks that you got removed from the long-term leaders list from the Investors Business Daily were PayPal and Viva Systems. I have bear trades on both of them. Let's check in with the bear trade on the PayPal holdings and see how it's doing. What I'm going to do here is I'm going to just clip this price, because it's after our price 162, and then I'm going to go over and I'm going to bring up one of the slides here for that, and let's see if I can get that up and for the PayPal. And what I'm going to do is I'm just going to I do this kind of manually. I update my my trades every day to kind of get the fair value, and I'll explain this in just a second what I'm talking about with the fair value of the trade. So here is my trade on PayPal. This is the one I did this morning, and I basically went into it by basically doing this, by buying the 185 calls and selling the 175. There's a 10 spread here. There's a 10-point spread here. This put $683 in my pocket. Now, if this works, if this trade works, I should make about 175% on it. Now, what do I say by works? Well, if this trade goes all the way to the end and expires, it will expire worthless, and I will keep the amount that I put in my pocket originally, $637. Let's take a look at the trade as it stands now. Okay, well, basically, where are we? Well, let's kind of move things around here a little bit. This is sort of how I do it. So basically, what's happened here is today the current price, as we just saw this, is that 672. So what I'm going to do here is I am going to I'm going to basically go over here and get to the right, hopefully the right one here. Yeah. Okay, is that about right? I guess. Yep. There we go. Almost 5 o'clock. Okay, so this is where we are now in terms of the price, 162. The question is, where is that? Well, we're over here we're over here. So let's take a look and see. Okay, so 162. Ooh, we're all the way down here. Looks like we are doing pretty well on this. I don't know if this is the right chart though. I'll have to take a look. Let me just jump on over here to the current chart, and I'm just gonna use the link here to go to the current chart. I may have updated it improperly. So what I'm going to do is I'm going to go down to where this one is currently, and this is the this is how it looks now. Okay, right now it closed. You see, basically at the 167. So right now, let's see how this trade is doing. We're actually way down here. We're below 170, 174. So we're going to have to adjust this trade. We're going to have to adjust this down a little bit. So what I'm going to do is I'm gonna move this down a little bit to 165. There we go. And we're at, oh, wait a minute, I gotta go lower than that. I gotta go 160. Gotta go low on this one. There we go. Okay, so basically we're right now at 162. Let's see what day it is. Oh, okay. And we're in December. That doesn't seem right. Oh, okay. No, we've got the Januaries. Okay, so we're basically right down here, 162. So we should be right about here. So in order to close that trade, we could close that trade for a cost of 88 cents. So we make pretty much all the money there. So anyways, that gives you an idea why I have a spread trade. I'm going to have to probably adjust some of that because it doesn't look like that information is all correct. But that's one of the reasons I'm so big on these spread trades, especially when the market is moving down. So, and I think that's going to be the case with PayPal as well. All right, thank you very much for that question. Can you look at Bitcoin? Okay, Bitcoin has been taken in the shorts as well. Let's take a look at it. I looked at it earlier this morning, earlier today. Right now, Bitcoin is in decline. And let's take a look at that. So what I'm going to do is I'm just going to put up the chart here with Bitcoin. And basically, this is the one-day chart. And as you can see, this is largely because of the sell-off in the market. We're down to 3,800. The key level on Bitcoin is 3,000. So what's going to happen? And we're not 30. What's going to happen? This is the year to date. Let's go to the year chart. There is some support at Bitcoin at 30,000 to the dollar. So I wouldn't be a buyer at Bitcoin here. I'd probably be a seller, and I'd wait to see if we get some support at 30,000. I do think that Bitcoin may go down as low as 20,000. Who knows? Bitcoin is under attack right now, and it's going to be difficult at least for a while. In a declining market like this, there's very little safe havens. Everybody says buy gold and all that kind of stuff, and so that, but there are bear trades. The best place to be right now in this market, one is pulling back, is in cash, waiting for an opportunity to come back into the market. The other best place is to do these bear trades, these spreads, these option trades, which make money as stocks are going down. So I probably wouldn't be seeking safe haven in Bitcoin. I think a lot of people are going to lose a lot of money. BLND, let's look at it. Let's go over here. Let's see if I can bring the right charts up. All right. BLND. What's that? I wonder. BLND. And this is Blend Labs. Boy, this is a bad chart. I'm sorry to say. I hope you're not in this one. I really do, because this one looks like it has a relative strength of 5, and boy, it's going down fast. This is really a problem when you're in penny stocks. I know people like them because they're like, wow, I can get a whole bunch of shares for a whole little price. I'm going to make a lot of money, but there's a reason that the institutional money usually doesn't invest in anything under $10, and this is the reason. Resides a digital platform for U.S. banks. Well, yeah, that might be great, and it might have been good last year, but the technicals look horrible on this one. You want to avoid this one. Unfortunately, this is not a good. It's not a good stock. I'm sorry to say that is the weekly chart. So I would avoid it. I would just avoid it. I would avoid this one. It doesn't look too good, unfortunately. What's the price? What's a good price to buy Apple? Well, I think right now a good place to buy Apple is not to buy Apple and wait for a bottoming. Let's look at the daily chart and see. Now the problem that we're seeing in Apple right now is that it's such a large component. Apple's the most valuable stock in it's the most valuable stock on the exchange right now. Worth $3 trillion. So unfortunately, there's going to be a lot of air let out of the tires on this one. I think that if it comes down and it gets support at 153, that might be a place to buy it. But we're not there yet. I think that a lot of air has to come out of the tires. So I would probably not do anything here. Just wait until it pulls back to about 153. That's kind of where I'm looking at Apple. Yeah, that's kind of what I'm looking at Apple. All right, we're in the last 5 minutes. Costco, buy or sell? It really depends on where you bought it, obviously, initially, and how much you're down. Here's my rule. Here's my rule on this one. And again, this is not only my rule. This is William O'Neill's rule that has been time tested year in, year out. The best thing to do if you on the rule is to consider is to consider selling if you are more than 7% down. That's just really a good rule to have. So always consider selling if you're more than 7% down. Right now, the stock is getting a little bit of support at 482, which if we looked at that totally, it's about $5 per. It's going to be about $5 per percent. So if we multiplied 5 times 7, that would give us about 35. So if you bought the stock below, it would be about 682 plus 35. So if you bought it above 500, if you bought it right about at, I would say here, that would be I would consider selling it. And so where is here? Well, here is about, I'm saying here is about 518. So if you bought Costco below, if you bought Costco above 518, consider selling it. Because you're going to have more than a 7% drawdown. So if your cost basis on Costco is 518 or lower, you can keep it. If it's 518 or higher, which I do think it probably is in your case, sell it. Just sell it. I know it's painful. I believe me. I know how painful this is. This is the reason I use stop losses. Okay, right about Street Smart Edge. I don't use Street Smart Edge. It's very good though. I hear down 22%. Oh gosh, yeah. On this one, it's an easy question on Roblox. If you're down 22%, sell it. I'm sorry to say this. I know you're not going to want to hear that from me, but believe me, if you sell it, you're going to thank me because, unfortunately, this is probably going to go lower. We just got to get ready to fight another day. The most important thing right now is capital preservation, so we want to be super careful on our capital. Okay, well, we are at an hour. Thank you so much, everybody. I'm going to be back. I'm going to be back on Monday at 2 Central Time. If you're not already on the action trailers, I do recommend getting on it because I'm going to be. We put out signals all the time. We put out a really nice email when the market direction changed on Tuesday, indicating that you should probably try to come into cash a little bit more. So we do put those out. It's free, easy thing to get in. It's really easy to get on the list. Just go to www.Dallas Trading Floor, and basically what it looks like is this. I'll just show you kind of what you need to look for. It's Dallas Trading Floor.com. Of course, that's what it looks like, and this is basically how it's going to look on the screen when you go to Dallas Trading Floor. You're going to see this thing, trade alerts list. Just your full name in there, SMS if you have it, because we're going to be doing some text alerts. We haven't started doing them yet, but we're ramping up for that. Your email, that's the most important thing, and hit that subscribe button, and it's a really great thing. Also, I wanted to point out to you that we do have a very nice watch list ready. It's a curated watch list. This is a good one. The ready list and the watch list, definitely something that you want to see as well, because even though we're all in cash, we're still looking for the best opportunities out there. If you want to learn how to trade the Can Slim way, and by the way, uh, Mark McAvaney, who is the number one, who won the individual investing championship this year, it just closed, audited financials and everything. Guess what? He is a Can Slim trader, and guess what book he uses? It's this one. You want to click on this one. How to Make Money in Stocks and Winning System, Good Times or Bad. This comes from Amazon, and it's gonna bring you over to this Amazon. This is a stock. This is a book you want to take a look at, because this is the Can Slim system. Many of the top traders in the world, and I'm not saying I'm a top trader, but many of the top traders in the world use this system, so it's definitely worth taking a look at. So I will be back tomorrow. I'm going to talk tomorrow on Monday, about 4 o'clock, and I hope everyone is going to do well this weekend. It's kind of cold here in Dallas, so stay warm wherever you are. One of the things I do, if you can help me on this, it would be great. Please like. That's the small like. We got to have a big like here. Please like this show, because it gets it out to more people. So appreciate it. So please like it. Everyone asks you to do that, but it really, really helps. I'm going to be back at 4 o'clock again, as I was saying, on Monday. We're going to be assessing some of the damage, and but right now, with the market in correction, you want to get into cash. You don't want to hold your positions through earnings, and so that's very important. So if you have stocks, you want to see when those earnings are. You probably want to sell those before earnings, if you're not up at least 10% on your stocks. So I will be back on at 4 o'clock on Monday. Happy trading, everybody. Have a good weekend.